Friends, I want to record one such video, which, I think, will help many people very, very much to change their attitude to trading. Yes, it will not be some kind of super educational video for some trading strategies, but they will open the curtains a little, yes, over the price analysis exactly according to the schedule, yes. And so I would like to ask you. Only now I will ask you to concentrate and listen to me as much as possible, what I will say in this video, so that you understand the essence. So, let's take a visual look at the graph right now. I have specially prepared several charts and here is this type of tool, yes, some kind. Pay attention, do you observe trends here? Well, any sudden movements? Well, for example, here I see growth, slowdown, growth, some kind of correction, growth, correction again, growth, reversal, a strong fall, what kind of correction, again, then some unexpected such non-chaotic growth, yes, after that even faster growth, correction. Well, we can say, yes, that it is possible to find support resistance levels here. Well, for example, we can say that well, here we had a support level, yes, which became resistance, or here we have a double top. Yes, or, for example, you can see some kind of rollbacks, yes, such peculiar ones. And in principle, this is reality and even I can see. Let's look at another graph. Here there are more of those who trade on forex, more such a chart is likely to be suitable, because, well, you can pay attention that there is a frequent return of the price to the previous value. Those who trade, for example, from liquidity zones, yes, a return of 90% there, almost a double bottom, a double top, and you will see them here too. However, you will nevertheless observe here and the slopes, for example, growth. You will see the head and shoulders, a reversal, yes, a double bottom, strong growth. You must agree that here, because of this reality, all this is visible, and it is quite clearly visible. Here is another graph. The same can be said, there is a flat, yes, there is some kind of trend decline with two impulses of some kind of correction and quite a further upward impulse. Some kind of peak, and the descent of the price. And there are actually a lot of such graphs. You try to press pause, consider these graphs that I show. I'll show you a couple more. For example, yes, some kind of photo-like movement, then corrections, a sharp increase, yes. And you will agree, these charts, but in principle, do not differ much from the foreign exchange market, even maybe, perhaps, you see some models that you terminate yourself. For example, those who trade from Fibonacci can see the Fibonacci corrections here and, accordingly, trade from them. Well, for example, on such a descending movement, you can put 0 to 100% of the movement, and there is about 61.8% correction, and after it a decrease of about, yes, I think there will even be an area of 127, 161, yes, here. Then some kind of correction is weaker, big breakouts down. Well, it's all really all good. However, I would like to show you something and reveal you to your eyes, as in principle to this cat here. All that you have seen now, all these graphs that I have shown are graphs made by the usual combination of numbers that correspond to the heads or tails falling out. Yes, seriously I say, here are all these graphs that I just showed, they are generated before the sequence. The sequence is very simple. If one falls out, we record 1, if one falls out again, well, that is, heads, yes, then accordingly we record +1 more, if tails fall out, we record -1. Well, that is, we have either +1 or -1. And this is how charts are formed. But then think about how trends are formed here. Why are they not being formed? These are absolutely randomly generated numbers. So, I want to explain something to you. Yes, if we just imagine that heads and tails fall out in 50% of cases, yes, maybe, well, either that or that. And in theory, we should see such a diagram that will not deviate from its average. But if we start to summarize them, all these data, yes, well, that is, positive, let's say heads fell out, we wrote +1, tails fell out, -1. If we have a solution, it means that, accordingly, we have a trend that is being formed. Therefore, I hope I opened your eyes a little, maybe someone already knew about it or heard about it, looked at it. I'm really just showing you now. However, the markets are not quite so simple. Yes, there are markets where there are certain biases, yes, let's see. I also generated numbers, but you will notice that there is some kind of trend. We will talk today, so in English the term is called bias, yes, or bias. The bias in the market that you can use for your strategy. And here I also generated graphs, only based on other preferences. In fact, here on each chart that I will show next, there is a slight bias of only 1% towards purchases. Here you see the reality of growth and falls, but you see a characteristic movement that indicates that the market is growing. Yes, it can decrease, but again I emphasize, this is a graph of fully generated numbers, and here there is absolutely no fundamental data. I'll show you another example. Here's another chart. That is, the same numbers are generated, it's all done in Google tables and even I didn't change any numbers, that is, they were just updated every minute and a new graph was drawn by the random function. Here's another chart. Here you can say the mind, then even the flat was. But if there is a bias here, why was a flat formed here? Again, I'm talking about the fact that there is a randomness, yes, of consecutive combinations when a certain number of heads or tails fall out. That's the same thing here. Here is another graph also. But pay attention, each of these charts has a certain trend, right? Dow theory works here. That is, for example, if the market is growing, then the Dow theory says that there should be rising highs and rising lows. In this case, we are considering an upward trend. If we observe something to the contrary, yes, accordingly, we will have decreasing highs, decreasing lows, and it can be used. And what to apply in relation to how to sewer this market, and how you technically terminate it, it will be your personal, yes, so to speak, priority. I would say that you could use it in such markets that already have a so-called predestination in some direction of movement, this is trading with a stop for the previous high or low. If in reality it is a trending market like this, and not like this, although there are also legal issues here, but here you can earn them on this market, then lose them at this moment before the transaction. So, when you work with such markets, yes, you will naturally have some patterns. You will have them, of course, stop periodically, but you will be in the right direction for the long term. So, I know that the market has a certain bias, but in this case we just have a chart, without fundamental analysis, without anything, you can use such a thing. If we see a new high, we are waiting for a correction, and when we see that the market has almost reached the previous low, we can buy and keep the market further up. The fact that the market will cash out again sooner or later. And this is just from the point of view of technical analysis. Why do I always say foundation in my course? The thing is that it is thanks to the foundation that we create this bias that we can use, yes, and thanks to the foundation we can stay in the right deals for the long term. Let's look at the charts again. Here is another generated chart like this. It is quite visible with such a chaotic movement, and here many scalpers can even see that the same level that was resistance has become support. Here it has worked out, here it has worked out. Well, yes, in fact there were no market makers, no major players in sight. These are generated, I emphasize again, numbers. Just generated numbers. Therefore, the illusion that some levels actually exist there, yes, it's actually only in your head, and that's exactly what most traders do. Therefore, do not treat the market precisely from the point of view of technical analysis, you understand what is happening in the market fundamentally. These are the key events that put pressure on the market. Let's look at some more graphs. Yes, here we see on the ascending graph, as if generated, first there was a fall, yes, then growth, then some flats, then a series of falls, then sharp falls, then we see sharp increases. Well, in principle, you will agree, the chart is very, very similar to live, yes, markets. Therefore, it is worth remembering this. So, let's talk about the facts, yes, what the markets have. Who remembers, I showed a video today that currency pairs go about 48% of the time for the sale of ladies, about 48% for the purchase and 3% in the flute. That is, the markets in which you will not be able to earn. Well, in this case I gave the index of the S&P of 500. This is yes, my favorite index, I trade it. The closing prices are selected here, from closing to closing, and, in fact, you can calculate as a percentage how many days the market rose or fell. This is a big story, we look right back to the 2nd of July of the 81st year. And now 10,387 trading days have been here, yes. And here we are, in fact, here. I have highlighted the main yes indicators that I would like you to see. So, positive days, the number of positive days was 53% and negative 46. That is, this market actually has a greater bias, yes, even than more than 1%. That's why, friends, if you trade inside the day, I emphasize, on indices, take this component into account. That is, if everything is quiet in the stock market, then basically everything is quiet in the stock market, right? That is, when the stock market feels normal, it will grow. When the stock market, and it essentially shows what is happening in the economy, you are negative, you consider your transactions negative. Here we have a chart from the 500th, yes, that is, here we have this drop, if you pay attention, such a tail and increased volatility on it. It was a crisis, a corona crisis, I'll call it that, yes. After all this, the market has grown quite well and now it has started to decline. But if it was caused by the fact that there was an epidemic, then now it is a fundamental reason for the decline. Yes, just as it was in the past, there were fundamental ones. Here is the mortgage crisis, the dot-com crisis, yes, these are all, of course, very serious falls. And the fact that the market has declined slightly now does not mean that this is actually the final decline. Although, of course, false statistics may be published, the market may get bullied, but facts are facts. Yes, we see that inflation has not been overcome yet, interest rates are being raised, jobs, although there are new historical highs in some states, they are mostly declining, of course, and people want to spend as little as possible now, and this will cause correspondingly lower company revenue and, accordingly, an economic downturn. I'm not saying that it will literally be some kind of Great Depression, but we have an economic downturn now in fact. Therefore, friends, try to review this video, remember that the generated numbers do not carry any essentially economic component or market makers, but on such charts you can detect certain levels of correction, yes. And this is really just number generation. Don't look for any market makers or level retention here, it's just in your head. In fact, here, for example, in this place, when you see a double vertex, yes, it actually only seems to you, because it actually does not exist. No one will defend it, if a slightly different sequence of numbers fell out, it would be punched up on you. The same thing as here could say, here we have a double top formed and the market rolled back, you were in a hurry, yes, after that the market went further up. And you would say this level, then you were looking for this level, then this one, and so on. So look, I want to remind you once again, if you use a similar approach, yes, just by analyzing the price, your strategies, whatever you are, they will definitely bring you losses for a long time. And I will say more, there are traders who I know are successful in the foreign exchange market, quite well in debt. But again, those who trade only on technical analysis, yes, either overestimate the risks, or the time has not yet come when they lost their deposit. And maybe even lost, but just no one will tell you about it now. Therefore, friends, I just wanted to ask you to share this video, tell us about such a concept, yes, which I am showing. And just remember that having a predestination in the market, that is, in fact, the numbers are physical, you will be on the right side in most cases. Well, Artyom and Skiff were with you, and making money in the markets, for now.